Hey everyone, welcome back to Corporate Dakota, the place where we dig into the financial lives of companies without needing a fancy accounting degree. Today we are looking at a fund that wants to build a better bond portfolio, but maybe its performance isn't quite as solid as its foundations. This report gives us a snapshot of how the Build Bond Innovation ETF performed over the last 6 months. We will look at what the fund invested in, how it did, and whether it is building something worthwhile or just rearranging deck chairs. If you enjoy getting this kind of info from corporate filings, make sure to subscribe and join our Discord community, linked in the description. This is a semi-annual report covering October of the previous year to March of this year. The fund's aim is to seek capital appreciation, meaning it wants its value to grow and also to lower the risk for investors. You can find more information about the fund on their website. Let's talk about costs. For every $10,000 you invest, it costs you about $23 over 6 months. That is an annualized cost of 0.45%, which is what you pay the company for managing your money. Now, for some key stats, the fund has about $7.5 million in net assets, meaning that is the total value of everything they own minus what they owe. They are holding 110 different investments in their portfolio. The portfolio turnover is 235%, meaning they are buying and selling investments very frequently. A 30-day SEC yield of 4.04% is the money you get back over a month as dividends. What did the fund invest in? This is always the interesting part. The top 10 holdings include United States Treasury notes and bonds with different interest rates and maturity dates. These make up a large part of the portfolio. There is also a corporate bond from Marriott International, the hotel chain, and EOG Resources, which is an oil and gas company. Looking at the top sectors, over a third of the fund's assets are in public administration. That is followed by manufacturing, finance and insurance, mining, oil and gas, retail, trade, information, and the accommodation and food services industries. A small percentage is in cash and other holdings. Now let's dive into the fund's financial statements. As of March of this year, the fund had total assets of over $7.6 million. Most of that is from investments. They also had liabilities or debts of about $1,100. Overall, this gives us net assets of about $7.5 million. The net asset value per share is $24.97. Let's review how the fund performed. For the first 6 months of this year, the fund brought in about $174,000 in income, mostly from interest. After expenses, it made about $150,000 in net investment income. They also had gains from selling investments income. They also had gains from selling investments and changes in the value of their investments. After all that, the fund's net assets increased by about $422,000. Now, let's take a look at how the net assets have changed over time. In the first 6 months of this year, operations increased the net assets by about $422,000. They paid out about $159,000. During this time, landing at about $7.5 million. The financial highlights give us a look at how the fund performed on a per share basis. At the beginning of the reporting period, the net asset value was $24.16 per share. Over the last 6 months, investment operations increased the value by $1.34 per share. Over the last 6 months, investment operations increased the value by $1.34 per share. At the end of the period, that comes out to a total return of about 5.6%. The Build Bond Innovation ETF is a part of Build Funds Trust, and the investment advisor is Build Asset Management. The fund aims to grow your investment and lower the risk, but let's dig a little deeper. How does the fund value its investments? Well, it uses fair value, which is what they think the investments are worth in an orderly sale. Some assets are easier to value because they trade openly on the market. These are called level 1 assets. Others are trickier, and the fund needs to estimate their value using models and other information. These are level 2 and level 3 assets. The fund mainly uses level 1 and level 2 assets, so it is not relying too much on its own estimate. The fund uses derivatives, specifically options, to try and increase returns or lower risk. Options are like bets on whether the price of something will go up or down. If the fund buys an option and it works out, they make money. If it doesn't, they lose the money they paid for the option. Build Asset Management LLC is the investment advisor and manages the fund's investments. The fund pays them a fee of 0.45% of its assets for this service. US Bank provides services like administration and accounting. Foresight Financial Services LLC distributes shares for the fund and offers a chief compliance officer and principal financial officer. It is worth knowing that some of the people in charge of the fund are also involved with the advisor or distributor. This doesn't automatically mean there is a problem, but it is good to be aware of these connections. What are the risks involved with this fund? Well, fixed income risk, the risk that bond values can fluctuate, especially with interest rate changes. There's also the options risk, that options are speculative investments. If the fund's bets with options don't work out, investors lose money. There is also US government obligations risk. Though generally very safe, these can be affected by market factors. Finally, there's portfolio turnover risk linked, though generally very safe, these can be affected by market factors. Finally, there's portfolio turnover risk, where frequent trading might lead to higher costs and taxes that eat into returns. So what is the overall takeaway from this report? This fund aims to build a better bond portfolio using a mix of government bonds, corporate bonds, and options. It has some good qualities like a low expense ratio and decent returns. However, there are also some risks to be aware of, like the frequent trading and the use of options. Now, looking at these results more broadly, I would say that the high turnover rate at 235% is worth keeping an eye on. This could mean higher costs and potential tax implications for investors. While the expense ratio is low, the fund's performance seems heavily reliant on actively trading, which isn't always a winning strategy. On one hand, a 5.6% return is good. On the other hand, with 11-10 holdings and a very active trading, which isn't always a winning strategy. On one hand, a 5.6% return is good. On the other hand, with 110 holdings and a very active trading, which isn't always a winning strategy. On one hand, a 5.6% return is good. On the other hand, with 11-10 holdings and a very active trading, which isn't always a winning strategy. On one hand, a 5.6% return is good. On the other hand, with 11-10 holdings and a very active trading strategy, you want to make sure that people know what they are doing. Alright, that's our breakdown of the Build Bond Innovation ETF's latest filing. What's your take on these numbers and what they signal for the fund's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives, and do not forget to check out the Discord in the description. Thanks for watching, see you next time.